Hello, everyone, and welcome to another episode of the Financial Advisors Want to Know podcast. I'm Catherine Tindall, one of the CPAs here at Dominion, a specialty tax and accounting firm for financial advisors and their practices. On today's show, I have with me Kristen Berman from Irrational Labs. She's a prominent behavioral scientist and co-founder of Irrational Labs, which is a leading behavioral design firm in Silicon Valley. I found Kristen through her LinkedIn presence and some content that I was impressed with, and talking about different behavioral moves that she was seeing in the work that her company was doing. So that's how we got connected. But her firm, her company partners with top companies like Intuit, LinkedIn, Airbnb, Meta, and Microsoft. So she's got the big institutional experience. But her work focuses on helping organizations use insights from behavioral science to improve decision making, enhance customer experiences, and create lasting positive change. So thank you so much for joining me today, Kristen. I appreciate you being here.
Thanks for inviting me. Excited to chat.
Yeah, and I think for the advisors, like, it's being in a professional services business model in client services, it's so much behavioral. It's like so behavioral compared to even other business models in a lot of way, because you're just, even for the owners, oftentimes, like, they are still in the client relationships while running the larger businesses. Like, they'll usually still keep a couple clients that are like their personal relationships. So I think that gives them really good context for seeing like what the rest of their teams are experiencing and things like that. But I think that one of the biggest bottlenecks, that I hear voiced from them when I talk to them about their practices is, being such analytical type people, it can be really difficult to get clients to actually take the advice that they give. So for advisors who are interested in the answer to that, like, where do you start in unpacking that question?
Yeah, it's a good one because, we have the answer to being thin and rich and happy. There is existing research that tells us how to do this, and yet
Yeah.
all of us likely want to be wealthier, thinner, and happier. And so this is the conundrum: is how do we get to these goals that people obviously want, but yet are not doing? And I think, behavioral science is a nice answer to that, because what we study is this gap between the intention that somebody has and the action that they're doing. And,
Mhm.
in a classic world, in a classic economics world, you'd say, well, they just don't have a preference to do the thing that I'm recommending. They may not want to, they don't agree with it, etc. And in our world, we're like, maybe that's probably true for some people, but for majority of people, they're just busy. They have other things going on. They're distracted. Attention is a scarce resource. It's not the
Yeah.
most exciting thing to do. It's highly uncertain. There are all these psychological barriers in the way. And, your job as either a coach, a financial advisor, somebody trying to do any sort of behavior change is to figure out what those barriers are and address them. And I think it's simpler than most people think.
Mhm.
I'm sure most financial advisors know the classic 401k auto-enroll story, big success. It used to be that people had to opt into something. Now they have to opt out. All of a sudden, retirement rates go from under 40% to over 90% just
Yeah.
because you've taken away a very, 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 very small step. Now people have retirement savings. And so that's the kind of thinking that people should apply in a day-to-day with their clients. Is there are small barriers that get in people's way to do the things that they want. Their job as a financial advisor is to figure out what those are and remove those barriers. And sometimes it's, as simple as making it the form easier, or doing it on the phone with them,
Yeah.
or kind of having a social norm that other people are doing this. So it's not, the recipe isn't too difficult technically, but we have to understand that those barriers exist in order to be able to address them.
Yeah, that's a really good point. And I think for advisors who, because I'm thinking through this with like the experiences that I hear them talk about of, like, you might, sometimes you just have a straight, like, where that barrier is, right? Like, you've told that client that they need to do, we need to make this transfer into this account, and I need you to sign this form, and then we're going to do it. And they, voicing concern, or like they're not ready, or they need to think about it, or like whatever it is, right? Um, but for those barriers that are not the obvious ones, like just getting somebody to sign up for the appointment, like there's this annoying step, are there things like that that you've noticed in your experiences with these larger organizations and customer journeys, like typical behaviors that like you might be surprised by that are barriers for people that are like unseen barriers, like you wouldn't realize that it's like a barrier?
Yeah. I think the principles are the same when you kind of know that somebody has a barrier of uncertainty or friction, and when you don't think that they do, but you can test this. And I'll give you an example. We worked with a company called One Medical. One Medical is a healthcare provider. They offer tons of options for doctors. You can go in and like find your perfect doctor, perfect time slot. And we quickly realized that that actually was causing people overwhelm, cognitive overload,
Mm,
that they would go in, see all these doctors, say, I should really like Yelp these people. I should really like be more diligent. And what that did is extend the decision-making process. And when you do that,
yeah.
great procrastination comes great status quo. And so you just don't do anything. And so the idea of kind of giving people a lot of choices and saying, well, there's lots of things you could do, it is very nice and intuitive. But what our
Yeah.
intervention did is limit it to one choice during the
Yeah.
onboarding. We made a strong recommendation. We gave people options on times, but no options on doctors. Now, of course, they could go in later and change it, et cetera. But that was pretty bold, to recommend one thing. But what it increased the conversion of people booking appointments by 20%, likely because we took away this procrastination element that they had. And so I think really deeply kind of empathizing with your end consumer and client, that they have uncertainty in most decisions, and your job is to simplify that uncertainty. And so the question is not like, how do you get them to decide, is how do you in the each step take out the small uncertainties that exist and help move them along. And would never underestimate, I was just reading a paper this morning that for pharmacies, they used to have something that says reply yes to opt into the text messages, and the text messages would basically remind you that you have a refill. And this is very important for people on chronic meds. They have lots of refills. If you don't opt into that, you probably will forget to do the refill. And so they changed it from a reply yes to a, I think it's reply stop or something, to stop the messages. This had an incredibly significant effect on the rates of people getting their medication. And I would say kind of like survival, mortality, right? Because if you're not picking up your hypertension medication, and by the way, the adherence meds are very low, it's not going to look good for you. And so these small frictions, reply yes, it's not hard. People can do it, but we're distracted. We don't pay attention. We're not thinking in the moment. And so that's kind of the exercise, is every single thing you're asking someone to do needs to be evaluated with that lens. Because it's not that they don't find that it's important. By the way, even telling people it's more important can actually increase the likelihood. There was a nice paper on this a while ago, increase the likelihood that you procrastinate, because if it's important, it's something you should spend time on. And so some of these can have backfire effects. When you're really trying to do, good by the client and help them, you actually may be increasing their uncertainty and thus their procrastination.
Yeah, absolutely. And that's something I've experienced too with, if you can really tailor the kinds of clients that you're working with, and that you know them deeply enough and know like their situation deeply enough, that instead of you saying, hey, I need you to choose between these three things, it's like, I think the approach that we take, and I think for a lot of advisors too, it's the, hey, I know your situation deeply enough. I recommend B. What do you think? Do you need more information? Yes or no? Okay, let's just do B. I think for a lot of advisors, that's really the case, where there can be a tendency to, especially for very analytical type client service people, you're like, oh, well, I want to make sure they're fully informed before they make this big decision. And it's like, that's just going to make this worse. Like, they can't digest the data.
Yeah,
like that's a big part of why you're here.
Yeah, exactly. And I think people have to just remind themselves that that's why they're there. We could all do Vanguard ETFs and invest by ourselves. Like, there's no actual technical barrier to doing that. Save that we want somebody who's done this before, who's an expert, who understands our situation, to do it for us. And so by understanding that's their job, maybe hopefully that mindset will allow people to have more social permission to really recommend things. We were working with Google engineers early on trying to have small businesses pick keywords for, you can imagine a florist in Kansas needs to pick a keyword for their AdWords campaign. And the engineers are like, obviously we can't recommend keywords. They know their business best. What if they sell lilacs or roses? We don't know. And in reality, that's true. But yet these are Google engineers who have built AdWords.
Yeah.
It's very hard to believe that they know less than the florist in Kansas about AdWords. And so, it's true that people know their own situation well, but the advisor knows how to invest money. And
Yeah.
that should be a highly they go in with a highly confident to recommend some path forward.
Yeah. And I think a lot of what being brought in is making, people want you to make the decision for them in a lot of ways. And that's a heavy thing to carry. That you basically have to make most of the decision for them. But, in terms of when advisors, so I think the two components that I'm always the most interested in with behavioral things are client journey, customer experience, because it's just the lifeblood of the business. But then on the flip side, when you get into these organizations, a lot of the cognitive behavioral things that you're looking at, kind of once you fix the client journey stuff, turns into like team management and management of people and internal dynamics of like, how do you get a team to keep rowing in the same direction, instead of different ways. Have you seen in organizations as they start to grow and scale, things that homegrown leadership, because a lot of these firms are homegrown leadership, have to kind of come to grips with in terms of like understanding some of the cognitive behavioral things that go on when you start to lead bigger teams and things they need to be paying attention to on like the internal side of things?
Just a slight interruption in this conversation. I wanted to bring to your attention two things that are important for you to know. So, we're always at the mercy of social media algorithms. So, if you can subscribe to the show, that would mean a lot to me. Even more to me if you can leave a rating and let me know what you think about it. But we have a new newsletter that's coming out. It's going to be very active in 2025. That is specifically around tax issues that I'm seeing advisors face in their own practices, changes in legislations, and the pieces that I think are critically important for you to stay ahead of as an advisor with the new administration. So nearby, wherever you're interacting with this, will be the link of how to sign up for our newsletter. Also nearby will be the link to my LinkedIn, which is the best way to get in touch with me, learn more about what we're doing for advisors in the tax strategy and compliance work that we do, and also to get access to the various tools and interviews and things that I do, specifically designed to help you improve your practice, improve your own tax situation, etc. So let's get back to the episode, and thanks for tuning in.
Yeah, it's very difficult, I think, to get kind of a cohesive group. So I empathize with this question. I think there's a couple things to pay attention to. One would be just incentives, and incentives could be monetary or social. So if I'm your manager, what do I ask you in a meeting is an incentive, because that means at the next meeting I have to come back likely prepared for that question. And so the incentive could be, who gets kind of acknowledged at the all hands or the team meeting. And then the incentive obviously could be monetary. But typically incentives drive a culture a little bit more than we acknowledge. And a lot of those incentives can be soft in what you talk about, what you're focused on. So, and that's kind of something that economics shares with behavioral economics, is we do think about incentives. We just expand it from, solely monetary to social incentives as well. And then the second thing would be norms. So we did a study with 300 financial advisors recently, where we actually kind of gave them different versions of advice. One version came from a peer, an experienced peer, 10 years of experience in the field, and another came from a very reputable, very experienced AI firm. And the advice was the same. And we had the financial advisors rate the advice. So half of the people got this human advice, half the people got this AI advice. And what happened, and you may expect, is that people trusted the human advice more than the AI advice. And the question there becomes kind of, why is this? And some of this is norms and peer effects, is that we actually we trust things that we're familiar with. We understand things that we're familiar with. And so some of culture change is getting people familiar with something that's new. So we can't expect people to like opt into something or be really excited about something they've never experienced before. They don't know that their peers are experiencing, because it's new. And so, as a manager of kind of a large firm would think about, if there's a behavior you want to introduce, how do we increase the familiarity, the exposure, the norms other people are doing this behavior? And then we can expect people maybe more on board. But as of right now, if, in our study, a lot of financial advisors had not used AI regularly, or were not using AI regularly. So it's understandable that you're not going to trust the AI that you haven't used or been exposed to. So some of the first step is this familiarity work, and not underestimating that people really actually do need to feel like it's, we buy stocks which names we can pronounce more. Why is that? It's familiar. And so the same thing with organizational behavior change. We want to acknowledge these types of factors affecting us on a kind of a daily team level.
Yeah, that makes total sense. And I think one of the bigger, and this would be an interesting thing to dive into a little bit, one of the bigger questions that I always get from people, because, they go through the process, it always turns into team building issues. Like once you've got the product market fit, the basic client avatar, you've basically cracked client acquisition, like how you get your clients and how that's working. Then it turns into team building issues. Like that's just the natural progression of things. And on the team building issues, a lot of the times, one of the big questions that comes back to me is, well, I have to start giving people equity in order for them to be incentivized, because I want them to be incentivized. And I always roll it back a little bit, because when you start doing that move just on a practical administrative basis, it becomes annoying in a lot of ways when you start shifting around all these tax things. But I always find it interesting that they always lead with the monetary one. And I always find it interesting too, that they always lead with well, I've got to give them equity. And I'd be interested to hear your response to that, because I hear that so often, and yet I see different things that seem to say something different in terms of what you need to think about when, is that actually how everybody's motivated? How do you determine how your team is motivated? And how can are there other ways that are going to be more powerful incentive structures than doing something like that?
So I think they're onto something with ownership. Homeowners sweep the front of their porch more than renters. Like there's something about ownership. The question is, does the ownership have to be monetary? And you can really think about ownership being more autonomy. People have autonomy on their domains. They have leadership, they have titles, they have status, things that actually are recognized to be some sort of ownership without the monetary attachment to that. And I think that's probably harder for leaders to do than dole out equity, right? Equity is a very transactional thing. Giving up some of the autonomy is a much more difficult thing to do. So my recommendation would be more to think about how you increase autonomy and ownership within the firm before doing the equity, and evaluate if you're actually doing it. Because a lot of times we think we may be doing that, and the reality is that people still feel like they're managed, or they don't have full control, and that'll kind of undermine any efforts that you do.
Yeah, no, that makes total sense, because I've seen that a number of times where people will just kind of throw equity at team members, but that nothing operationally really changes, or they'll do that, and then the person ends up leaving not too long later because the actual infrastructural relationship problems are still there. And then, now they've got this mess where they're having to buy it back, and just all this goofy stuff where it's well, actually, they needed more autonomy. That was the issue, or they needed mentorship, or they needed a more transformational leadership style instead of, really micromanaging kind of leadership style. But so for advisors who are interested in learning more about the work that Irrational Labs is doing, what's the best way for them to get into your world, Kristen?
Yeah, irrationallabs.com has a lot of resources. So if you click on our Learn tab, that's probably a fun place to start. We have a newsletter that sends out, recent case studies and news from behavioral science. I personally think it's highly entertaining, but that's obviously unbiased. I have a Substack as well that, if you're on the newsletter, you'll be able to see the Substack that actually does teardowns of popular products. And even if you're not really into that, you'll basically learn to think like a behavioral scientist. You'll kind of learn to evaluate some element of life with this kind of skeptical lens of how do you drive behavior change. And so the Substack is just product teardowns, Kristen Berman, or just do the newsletter. And then if
I've
folks,
seen them. They're fun, people. You should watch them. They're really entertaining.
I hope to kind of bring, like, if you were a behavioral scientist, how do you look at this? And a
Yeah.
little bit more skepticism on what works and if it works. And then the final thing is we do have a, we're a consulting firm. So most of the work that we do is deep within companies trying to change behavior at either organizational level, but many times products and marketing and growth. But for those just wanting to get their feet wet, we have a boot camp. It's an online 8-week boot camp where you get in-person or video office hours once a month. And there's a Slack where you can ask questions to experts. So I would say if you want to learn more and are serious about it, and an easy foot in is this boot camp. But we also have a lot of YouTube videos and things you can dive into as well.
Cool. Love it. So for those of you listening, we'll put the links around how to get access to some of that content, and then also Kristen's LinkedIn so that you can see her. Like, I know you post those tear down videos every so often, which was, I think, how I originally found you. It was like, oh, we need to talk.
Nice.
So yeah, for those, we'll post that there. But do you have any final like thoughts or things maybe we didn't hit today that you think advisors need to hear?
I think the main one after talking to advisors is this over reliance on information changing behavior. If they could only see how much their
Yeah,
money would
it's
go
so true.
up into the right, let me show them a better graph. I should change how the graph looks. Guess what? That's not going to work. I would do other tricks in your toolkit, whether it be this norms, making it easy, reducing uncertainty. But a different graph showing how their money works is just not the toolkit that people need. I would more think about kind of opportunity cost. So money is just opportunity cost. If you
Yeah.
want to spend on this, you can't do this. If you want to invest in that, you can't do this. And so talking to people in terms of trade-offs is going to be an easier way to convey choice versus just, up and to the right, which, it should be motivating. It really should. But sometimes it's just not the thing that drives us to act.
Yeah, absolutely. No, I always joke with, think about this from my perspective is like money is just a very unnatural thing. It's like, how long have human beings really had this? Like none of our wiring is really designed to like respond to numbers on a screen. It's like we're responding to stimuli of things actually in our environment. So it can be hard to make rational decisions when it comes to this, just because it's not, it's a really new thing for human beings to have to deal with it. And it's like, how do you even put things in context that you can really understand? But so thank you so much for coming on the show, Kristen. I really appreciate you taking the time.
Yeah, wonderful. Thanks for having me.
And for those of you listening, we'll post those resources nearby. And this was another episode of the Financial Advisors Want to Know podcast.